10. I started to do chapter 10 yesterday, and I always get stopped and sidetracked by that, but I'll be able to do that later today, or hopefully later today. But anyway, this is going to be 15 questions. The exam is going to be 15 questions, 15 multiple choice questions, one free response, right? Don't forget, you need to bring the Scantron, the same one we used last time, right? And then any notes, etc. Just, please don't abuse it by bringing, all the printout of all the test bank. But other than that, uh, past quizzes, slides, the book, your own notes, those things are all fine to bring for the exam. Okay. Um, we'll have the whole class period. It is important that you get here on time. When I say on time, I don't mean Berkeley time. I mean real time. So get here at 12:30, and I'll do my best to kind of rush the previous class out, and I'll do my best to block the next class from coming in. But you know how that goes. So it's somewhat of a to me, they should just set up the system that the class starts when the class starts and it ends when the class ends. Because this thing of like, well, okay, gets me in a position where I'm like boxing with the other teachers to get them out and keep them out. So anyway, but that's all fine. We'll roll with that. You should have plenty of time to work through it. Okay. Um, before we get started, well, we'll put that at the end, but somebody remind me to open up about questions about the exam in general, or you want to ask any of those now while you're thinking of them? Any questions in general? It's just like last time. Okay. All right. Okay, good. So let's just go ahead and let's get into some of these questions here. And you may have seen some of these already. I don't know to what extent I had selected some of these as ones that would go into the homework for this chapter, but these are from the test bank, and we have this iris, and I looked at that for about 2 seconds when I first looked at this question. I'm telling me the IRS collected, and then I realized it's no iris. I get it. Collected 150,000, and on her deceased husband's life insurance policy. The policy was purchased by the husband's employer under a group policy. Iris's husband had included 5,000 in gross income from the group term life insurance. This, guys, is a distractor, isn't it? It doesn't matter what he included in gross income in terms of how she's going to handle now receiving the proceeds, right? That's irrelevant, okay? But they put that there just to sort of confuse you. She elected to collect the policy in 10 equal annual installments of 18,000. So if she's going to have what? These 10 installments at 18,000 a year, then over the course of this 10 years, she will collect what? $180,000. Meanwhile, what? The if she had just taken the money up front, she would have collected what? Just 150,000. So there's an interest component in there, right? And remember, the interest component is taxable, right? As we look at the payment. So we have to answer this by using this formula that what? For each $18,000 payment she receives, she can exclude what? The principal part of that and pays tax on the interest component. So she'll have to pay tax on the remaining amount, whatever that comes out to. Okay. Question? Okay, good. So she has to pay tax on that part that constitutes interest on this. Okay, good. Is the insurance payments on life insurance and death is not taxable, right? Okay, but the interest part here would be. Okay, number 2, Albert has a terminal illness which required almost constant nursing care for the remaining 2 years of his estimated life, according to his doctor. Albert had a life insurance policy with a face amount of 100,000. Albert had paid 25,000 of premiums. Doesn't matter. The insurance company offered to pay him 80,000 to cancel the policy, although it only had a cash surrender value of 55,000. And Albert went ahead and took the 80,000, figuring, well, at least I'm gonna have some cash in these last couple of years to help with medical bills, to take a vacation, to go visit my friends before I die. Whatever it is that he wants to decide to do with that 80,000, he can do, right? Okay. Now he went ahead and paid some medical expenses, which doesn't matter, and then he had a miraculous recovery after and lived another 20 years. Well, good for Albert, right? And so what happens? You start thinking, well, geez, then he has to pay the tax on that. No. What happens? None of this is included in his gross income. He got the money in a terminal illness, and the IRS doesn't come to your house after 2 years and kill you. Okay, so hey, the guy outlived the expectations, so be it. He doesn't have to pay tax on that, right? Okay. Okay, good. Let's take a look at number 3. Ridge is the manager of a motel. As a condition of employment, Ridge is required to live in a room on the premises so that he can be there in case of emergencies. Sounds like a great job. Ridge considered this a fringe benefit since he would otherwise be required to pay $100 per month for rent. The room that Ridge occupied normally rented for $7 per night or $2,100 per month, and on average 90% of the motel rooms were occupied. And the reason they're throwing that out there is they don't want you to think, well, geez, are they having to give up potential revenue from customers that they could have rented the room to because they got this, whatever his name is, Ridge, staying there, okay? And so they would have still had, extra capacity, right? So they can go ahead and give him that room, and there's no additional cost to them, right? So since it's no additional cost, he's there really as a what? As a convenience of it really doesn't matter that it's additional cost because he's there as a what? As a convenience to the employer, right? And if that's the case, then he does not have to include any of that in his income because he's there as a convenience for the employer. Uh, if it's to the convenience of the employer that you're staying where they ask you to stay, then you don't have to include it in the gross income. So let's say, just to take it a little differently, let's say they want you to stay at the hospital, and they give you a room at the hospital, and your emergency room doctor or something. You're not going to obviously not going to have to pay that, right? So it's for the convenience of the employer. I'm not sure which 5% rule you're talking about, but I can put the slides. I can put the slides up. Hang on a sec. Okay. Let me get my little clicker just because it's easier to get to them that way. 35. Employer of an educational institution may be able to exclude the value of campus employee of campus housing provided by the employer. Generally, the employee does not recognize income if he or she pays annual rent equal to or greater than 5% of the appraised value. So this is, an educational institution providing campus housing like the dorms or something like that, right? In other words, they'll let you not include the portion that's not the 5%. So, in other words, if generally the employee does not recognize income if he or she pays annual rent equal to or greater than 5% of the appraised value of the facility, meaning that you're pretty much paying the rent, and they don't sit there and say, well, they let you have it for you're paying 95, but they usually charge 100. You don't have to include that $5 in your gross income because you're making up at least 95% of it, right? It's the way I read that. So generally, the employee does not recognize income if he or she pays annual rent equal to or greater than, um, oh no, it's the other way around, equal to or greater than 5% of the appraised value of the facility. So I guess we'd have to get the appraised value of the facility, and as long as you're paying rents equal to or greater than 5%, so the $5, if you're paying $5, you got to pay something. You don't have to include that in your. So it's the opposite of what I said. Okay, but that's different than, they don't say anywhere in here that that was for the convenience of the employer. Okay, I'm trying to find where we talk about it's for the convenience of the employer. It was somewhere in here. If it's the convenience of the employer, you don't have to include it at all. Uh-huh. Any other question on that? Okay. Okay, let's take a look at number 4. Taxpayers, a PhD student in accounting at City University. The student is paid $1,500 per month for teaching 2 classes. The total amount received is $13,500, and the question is, do you have to include that? Yes, you do. This is not a scholarship, right? If it's a scholarship, we would not have to include it, but if you're having to perform some service for the money that they're giving you, then that becomes what? That becomes taxable, right? If it was a scholarship, you would not have to include it. Okay, number 5, trade and business expenses should be treated as, and remember that what? If it's in a trade or business, it's for AGI. That's going to be taken as expense on the Schedule C, and then the net income from the Schedule C rolls forward to the 1040, right? And would be included there on the 1040 as a taxable item. Number 6, Al is single, age 60, has gross income of $140,000. His deductible expenses are as follows. And what is his AGI? So we go ahead and we start out obviously with his net income, right? And then what are going to be the deductions under the current tax law? He can deduct this alimony, right? How about charitable contributions? That's going to be what? From AGI, not for. Contributions to an IRA, we did not talk about exactly how that works yet because that comes up in a later chapter. But an individual retirement account, that's a deduction what? For AGI. You can take that. Okay. Expenses paid on rental property, that's going to be a deduction for AGI, although be it on what? On a Schedule E. That Schedule E will roll forward to the 1040 in a manner similar to what we've talked about for Schedule C. How about interest on home mortgage and property taxes on the personal residence? Those are what? From AGI. Those are itemized deductions, right? How about estate income tax? Those are what? From AGI as well. Okay, so when we take a look, he can take the, did I miss the expenses on the rental? No, I got it. The expenses on the rental, the IRA deduction, and so he can take these as deductions for AGI, and so his adjusted gross income would be $107,000. Okay. Okay, good. Number 7. Stop me if you have a question. Which of the following is a deduction for AGI? And again, contribution to an IRA is a deduction for AGI. They have that right on the face of the 1040. Roof repairs on personal use home, that's not deductible anywhere. Okay? It may add to the basis of the home, So when you go and sell the home later, you don't have to pay as much tax on it, but it is not a deduction. Safe deposit box rental fee, in which stock certificates are stored. You can take that as what? As a deduction against your investment income, right? Okay, and have that as a itemized deduction from AGI. Property tax on personal residence, that is a what? From AGI deduction. Okay, number 8, during the year. And this one wasn't set up as a multiple choice. I went ahead and put it in there anyway, though, just because I liked the question. So it's not a multiple choice, but we should still be able to answer this. During the year, Rita rented her vacation home for 12 days for $2,400. She used it personally for 3 months in the following expenses. Now, I'm going to call out to you whether or not it is personal use versus rental use versus personal/rental for your test, because I don't want you to sit there and have to freak out on the days and remembering all these days requirements. But 12 days is less than what? Than the 15 days that would have caused it to. Is it 15 or 14? 15 days. See, I don't even like to remember the days. The 15 days that would have caused it to be what? Would have caused it to be, say, rental or rental/personal use. So it's clearly in the what? Personal use category. And if that's the case, they do what? They do not make her include the $2,400 as income, right? She can exclude that, okay? The property taxes she can take as an itemized deduction, because the rules for, I'll put an I there, because the rules for what? For itemized deductions, at least right now, for tax was what? For state and local tax, to take them as an itemized deduction, right? And you're going to hear me cry about my most unfavorite part of the new tax law, which is now they're limiting us to 10,000, right? I mean, there's no way that that was aimed at anything but California and other states that didn't vote for Trump. That's why it upsets me so much, because that's not the way you govern. You don't sit there and punish, parts of the country in this fake reward for the rest of the country. It's nonsense. Anyway, stop. Okay. So anyway, so then what? Then we have what? We have the mortgage interest, and she can take that as what? As it's still good as an itemized deduction, because remember, the mortgage interest is what? Your home plus one other home, right? Okay, so she can still take it there. Utilities and maintenance, no. It's personal use. You can't take the utilities and maintenance. If it was what? Was rental use, then she'd have to take those utilities and allocate them between what? Personal use and rental use, but since it's purely personal use, we don't have to worry about that. Same thing with depreciation, okay? Insurance, what? Not going to be deductible since it's a pure personal use, okay? So she excludes the $2,400, and then she could go ahead and do what? Take the expenses for the property taxes and mortgage interest, take those as an itemized deduction. Okay? Okay, good. Let's go ahead and let's take a look at number 9. There was no multiple choice on that last one. Tom, age 48, is advised by his family physician that he needs back surgery to correct a problem from his last back surgery. Okay, maybe he shouldn't have any more surgery. Okay, but he's in a wheelchair, so I guess it can't get much worse at this point, right? So he needs his wife Jean to accompany him on his trip to Rochester for inpatient treatment at the Mayo Clinic, which specializes, well, at least he's at the right place, in this type of surgery. Tom incurred the following cost in 2017, and they want to know what are the medical expenses for this trip, and of course it's subject to the AGI floor here. And so what happens, and I kind of see now, remember I kept saying I don't understand why it's a floor. I guess it's a floor because before you get to the floor, you're below the floor. And then you get to the floor, and any amounts over the floor, you could go ahead and take those as deduction. So I was getting a little annoyed with the book calling it a floor. Now I get it. I like to think of it as a hurdle, right? I have to get over that 10% before I can start taking expenses. But anyway, so we come over, and we have the round trip airfare. Can they take that? They can take that. Jean's Hotel in Rochester for 4 nights. They could take that. And of course, it begged the question, well, are they staying in the same room? I assume they are. They say Jean's. But, I guess he's staying there too. If they weren't talking and, they got in a fight and they rented another room, they could take that one too, right? Okay, so, I don't know why they just call it out as Jean's. Jean's meal while in Rochester? No. There is no provision for what? For board, for, for sustenance. There is no provision for that, so they're not going to include that. Okay. Tom's medical treatment? Obviously, yes. Tom's prescription medicine? Obviously, yes, right? Okay. So we go ahead and we add those items up, and, but we can't take the full room charge, right? Because the room was what, 95 per night, and we're limited to what, $50 per night. So we're limited to 200 on the room because we can only take $50 a night. Okay, so we would need to hold that at 200. Okay, I guess if you don't want to get mugged when you're coming out of your hotel room for some ice, you might want to spend a little bit more, right? I mean, $50 a night, you can't stay in a very nice place. Okay. Okay, good. Let's go ahead and let's take a look at number 10. And we're moving right along here. Was there a multiple choice there? So the answer was B. Just clear that up. So it's what? 700 plus 200 plus what? 3,500 plus the 6 for the medicine. Hopefully that comes to 5,000. Okay. Okay, good. All right, let's take a look at number 10. Joseph and Sandra, married taxpayers, took out a mortgage on their home for $350,000 15 years ago. In May of this year, when the home fair value was $450,000, they owed $250,000 on the mortgage, and they took out a mortgage home equity loan for $220,000. I just always look at that. I guess the bank's willing to lend them a second mortgage. They must make sufficient income that they're satisfied loaning them more than the amount that they have, the equity that they have in the home, because they only have what? $450 fair value minus $250. They only have $200,000 of equity in the home, but they loaned them more. Okay. They used the funds to purchase a single-engine airplane. That sounds very risky to me. I'm like, okay, don't do it, guys. We read about people all the time in these single-engine airplanes, but go ahead. To be used for recreational travel purposes. What is the maximum amount of debt on which they can deduct home interest? And you come down here, and it is the lesser of what? That equity that they have in the home, or what? 100,000, and they're capped then at what? The 100,000. So even though they borrowed this larger amount, or they borrowed more than the equity in the home, they can't take the full 220. They can't take the total equity part that they have in the home because they are capped at what? The 100,000. Okay. Okay, and note that they can take the interest on this 100,000 as it's going to be deductible as part of their home equity interest. So I mean, this is not a bad way to buy some stuff that you want and still get the tax deduction for the interest, right? Which is what this Ross does in the next question. Ross, who is single, purchased his residence 8 years ago. This is a weird question. You'll see why in a minute. He's single. He purchased personal residence 8 years ago for 170,000, and took out a mortgage of 100,000 on the property. In May of the current year, when the residence had a fair value of 220,000 and Ross owed 70, so he's got what? 150,000 of equity in there, right? Okay. Then what? He took out a home equity loan for 110,000, and he used the funds to purchase a BMW for himself and a Lexus for his wife. I thought he was single. Is he married or is he single? Or maybe he's trying to get the wife back. Maybe it's the ex-wife, because they're saying that he bought it for the wife. I'm like, the wife doesn't have any equity in this house. She's buying it for herself. He's not buying it for her if he's taking a loan out on their house to get it. But anyway, so there's a lot of weirdness in this question. Okay, so for both vehicles, he used 100%. For both vehicles, 100% of the use is for personal activities. What is the maximum amount that he can deduct on home equity interest? And so what happens? He can go with the what? With the 100,000, because it's the lesser, right? So he can take that 100,000. So he can deduct all interest on the what? On the first mortgage, and of that 110,000 that he took out, he can only deduct interest on what? 100,000 of that. So he can still deduct the interest on his first loan, and then he can deduct any interest up to, on that second loan, up to the 100,000. Richard? Yes. Yeah, it only comes down if you're married filing separate. Right. Married filing separate has all the horrible consequences in it. And so if he was married filing separate, it'd be 50. But if you're single, yeah, there's no limitation. They don't predicate it on marriage in terms of itemized deductions. Typically, don't get affected by marriage. Double this for a single, or double for the married, half for the single. Okay, where the only thing that I've seen that where they do something to you is if you're married filing separate, then they start to reduce what you're able to do. Okay, Maggie? Yes, for the first mortgage, you can deduct all the, well, indebtedness up to $1 million, right? We have the $1 million, and you can deduct all the interest on loans up to $1 million, right? And then if you take a second mortgage, then you get capped at that 100,000. So the total indebtedness, acquisition indebtedness up to $1 million, and then second mortgage up to 100,000. So the total, at least for now, is 1.1 million. And then again, our buddies with the new tax law, they lowered that now to 750,000 or something. Again, taking aim at, in my opinion, states like California, because there's a good chance. I mean, I'll tell you, in your lifetime, if you stay in California, you will have a debt of $1 million. You will have a debt of $1 million for a home that you're going to purchase. And the reason is going to be that the prices of homes are going to keep going up, and there's going to be what? You're not going to have enough of a down payment to clear that you don't have a loan of $1 million, but because you have studied hard and you're going to get good opportunities in the job market, and that you'll be making enough that they'll be able to qualify you for that loan, right? For that loan. But the But this ridiculous thing of now lowering that, why? Why would you lower that? I mean, the only people that have to do that are people that actually live in a high cost area that are forced to borrow money. That doesn't affect high income individuals because what? They'll just go in and pay cash for the thing, right? Of all the money that they have. So that clearly affects the future of states like California, and they do it on purpose. They did it on purpose just to hurt California, and other states like that. There's no other reason for it. I mean, you say, well, John, they can't just sit here and just, have a huger deficit because they're not being in the tax revenue. Okay, well, try this one. Don't increase the amount that rich people can pass down to their kids. Double that from 5 million to 11 million. How about that one? You pulled that out of it, and now you can create a situation where people like you that are working hard and going to stay in California can, be able to deduct all the interest on the loan that you're probably going to end up having to take at some point. So anyway, end of speech. Okay. All right. And you've heard that speech 10 times now. Okay, number 11. Any other question on this one, number 11? No? Okay. Number 12, and notice, guys, I kind of got into the free response mode here. We kind of clicked in to that. And I put a few more of those because I saw some in the test bank that I thought actually illustrated some of the rules pretty good. And so I think this one is one of those that gives us a little more practice with the AGI limitations for charitable contributions. Okay, so she has a stock. She has AGI of 100,000. She donated this stock that had a basis of 8,500 to a qualified charitable organization on July 5th, 2017. What amount can she deduct, assuming she purchased the stock on December 4th, 2016, and she's giving it away in what? The middle of 2017 in July, so she has not held that stock for 12 months, so it's going to be treated as what? Ordinary income, short-term capital gain here, and so the deductible amount is going to be what? The basis, the 8,500, right? Okay, now maybe the charity was begging her for the money, please, or for the stock. We got to have it now, or we're going to go bankrupt or something. And she took pity on them and just went ahead and gave it up. But if she had waited a little while longer, another 6 months, told the charity, hey, can you make it till the end of December or so? Then she could have taken the deduction of the full, what was it? 15,000 in that example. Okay, assume the same facts as an A, except that Georgia purchased the stock back in 2009. Now she can take what? Now she can take the 15,000 because it's now treated as a, well, capital gain, and you can take the fair value. Okay, all right, good. C, assume the same facts as in A, except the stock's fair value is 6,000 rather than 15,000. Well, if you have a lost property, then they just let you take what? Whatever that lower fair market value is. And so we would be limited to the 6,000. You can see me maybe asking you a question like this as your free response. Yeah. Chapter 10, charitable contributions. Itemized deductions, of which one free response, something like this. I can see me asking you something like this. I'm not saying it's going to be this. I'm just saying that I could see this being the nature of a free response question, where I'll maybe give you a few elements where you have to just give us amounts, because frankly, it's easier for Derek to correct if he just has to look to see that you got the amount, but you got to work through a series of changing fact patterns. In, yeah, if she held the stock for more than 12 months, in the case C, she'd still be limited to the 6,000. It's whatever if the fair value is less than the basis, then it's the fair value. If you hold it for less than the 12 months and the fair value is more than the basis, then it's the basis. If you hold it for more than, did I say more than the 12 months when I started that? Less than the 12 months, and the fair value is more than the basis, then it's the basis. If you hold it for 12 months or more, then it can be the fair value. But if it's below, then it's it's the fair value period, below or above. Okay. Okay, good. Yeah, that's chapter 10, charitable contributions, the stuff we talked about on Thursday.
Sorry, so just to
Yeah.
clarify, so if it's held for more than 12 months, then you have to take the fair market value whether it's lower or higher.
Yeah, it's just fair value. Yeah. Yep. Yeah. You just start treating it as capital gain property. You take whatever the fair value is. Okay. Okay, good. So we're on 13 now. No question there. Linda, who has AGI of 120,000 in the current year, contributes stock to this corporation, a publicly traded corporation. I'm reading this wrong. She didn't. I was like, why would she give this stock to the corporation? Contribute stock in this corporation to the Salvation Army, a qualified charitable organization. So this is a 50% organization, right? Okay. This stock is worth 65,000, and Linda acquired it as an investment 4 years ago at a cost of 50,000. What is the total amount Linda can deduct as a charitable contribution, assuming she carries over any disallowed contribution from the current year to future years? Well, what happens? You can see right here, guys, she is limited to 30% of her AGI for capital gain, right? So even though it's a 50% organization, 50% organizations, we can what? We can contribute up to 50% of our AGI, but in the capital gain category, we're capped at what? At 30%, right? So the 50% is an overall cap. For capital gain contributions, the cap is 30%, right? Okay, so she can only deduct 36,000. Now let me change the fact pattern up here a little bit. Let's say she also gave $10,000 cash. So she gave this stock, but she also gave cash with this fair value of 65. Now what would be the answer? Well, since she has what? She has AGI of 120,000, right? We multiply that by 0.5, so she can contribute up to 60,000. She's just capped at how much of the 30 of the capital gain for the stock that she can contribute, right? So we would take that 10,000 and do what? Add it to the 36,000. She would be able to deduct then as an itemized deduction for charitable contribution 46,000, right? She's not exceeding the 50% cap. So the 50% cap is an overall cap, but we are capped what? Within the capital gain at 30% here for a public charity like the Salvation Army. If it was a what? If it was a non-operating, non-public charity, then they squeeze you even tighter in there, which is what? 20% of the AGI.
So you changed the fact pattern by saying she donated $10,000 cash?
Yeah, I just changed it up and said let's pretend that this thing said that she also gave 10,000 cash. if she gave 10,000 cash, then she can use that. She starts with that. She first gives that 10,000 because that's 50% property, and then she can move to whatever she has left against the overall cap in this other area, the 30%, but it's capped by 30%. So it's a cap inside a cap, right? What would happen, just to play jazz with this one more time, what would happen if she gave 40,000 cash? Well, first of all, I'd say she's being really, really nice to the Salvation Army, okay? But she gives them 40,000. She has a cap of what? She has a cap of 60, right? So she can give the 40. She first has to use up that 40 from her 50% category, and then what? Then she's only got 20,000 left that she can take from here, even though that's less than from the stock here, even though that's less than the 30%, she's bumping up against her 50% cap at that point, right? So to keep her at 60,000, the 30%, 50% cap, she can't even take the full 30%, right? But regardless, what? The amounts that you don't take this year can then do what? Carry over for the next 5 years. So now, jumping back to the way the question was originally contemplated, she had what? She had a total of 65, the fair value of the stock, because she held it long enough for it to be a capital gain property. She took what? 36. So she's now left with 29,000. That will carry forward into the next 5 years, and it maintains its status as a 30% limitation. So now she'll be limited what? To 30% of that her AGI going forward in the future to be able to continue to deduct that additional amounts. And of course, if she gives other contributions, that all counts against her 50% category. Question? That's all I got, guys. Other questions? Something you saw in the homework or something? No? Yeah. Uh huh. Because it's for his medical care, if they deducted, if they filed separate returns, it wouldn't matter because it's on his return, right? Now I'm just trying to remember, do we have any limitations for married filing six separate um, for medical expenses? I don't think so, right? I didn't see again the the problems usually don't affect itemized deductions that married filing separate, except for that issue that we had with the home interest. You're limited to 50,000, but no, because it's for him. She could have hired a nurse, right? He could have hired a nurse to do this. So the fact that it's his wife is of no consequence. Except he would have had to pay the nurse, probably. He didn't pay his wife for her trouble. He would have had to pay the nurse so much.
Then if it was a nurse, you still couldn't take the meals for the nurse?
Well, I don't think there'd be a meal allowance. No, if they said, well, and she had a meal allowance of so much, I mean, presumably you're paying for her meals and her pay or his pay, I would imagine. I mean, if I was him, I'd get me a very strong nurse. He's in a wheelchair, he should probably get some help. But presumably, it's just their pay. You wouldn't deduct their meals. but you could deduct whatever you're paying them. When my dad was in the hospital, they kept on, they said he couldn't walk, and they wanted us to put him in a nursing home because they said he couldn't walk. And that was the testimony of his physical therapist, who was about 5 foot, maybe, 105 pounds before she was pregnant, and now she's 7 months pregnant, and they got her trying to lift my 200 and something pound dad out of the bed, and she keeps testifying that he can't walk, and they want us to put him in a nursing home as a result. So everyone's telling my dad, yeah, you can't walk. And my dad said, the hell I can't walk. And I can't believe my own kids can believe I can't walk. So I just kind of grabbed him, got him up out of the bed, and he could walk fine. It's just one of these things that she wasn't going to sit there and let this big old dude fall over on her while she's, about to have a baby. So I told him, look, you got to get a physical therapist up here that can, get this guy out of bed and get him going. So you ever have aged parents, don't believe the hospital. The hospital wants to move an old person out of the hospital and into a nursing home as quickly as possible because they're afraid that Medicare is going to deny paying for anything that is considered a skilled nursing facility situation. And once they put them in the nursing home, that's it. I mean, they're just going to lock them up in there and that's it. So don't believe it. You got to be prepared to fight with those hospitals. They don't know what they're talking about half the time. And because I worked as a janitor in a hospital for 7 years, I know where all the I know all the terminology. Well, get CPD up here. Okay. I want to talk to the ombudsman. So whatever. Okay. Anything else? Questions? Anything relevant to the course? There's no tie back to tax on that. Oh, yeah. Thank you. Yeah, I wanted to say something about that. I'm thinking it's going to be chapter 10, something from chapter 10, or I haven't taken, because I haven't prepared the exam yet. I'm going to take a look at the rental, the vacation home thing, because I think that might have some nice little things, enjoyable things that I can have you do to figure out, how to allocate between the personal and the rental portion, and then ask you a series of questions off that.
In regards to like the 15 multiple choice, are you gonna like split it evenly
Oh
between
yeah,
options?
thank you. These are all great questions. What I'm going to do is I'm going to of the 15, I'm thinking maybe, don't hold me to this, maybe six, maybe five from the first two chapters. So let's say maybe three each from the first two chapters, chapter 5 and chapter 6, and then the balance from chapter 10. I'm focusing on chapter 10 a little bit more just because we had more variety of subjects in there. You've got medical, you've got the interest, you've got the charitable contributions, you got the miscellaneous. So there's more stuff there that I think if someone understood that you were an accountant, you were a CPA, that's the kind of stuff that they're going to ask you over, dinner, even though you're not a tax person. And so you're going to want to probably sit there and know some of those things so you can say, well, I'm not sure, but when I took my tax class, it was this. So those things, those topics tend to come up a little bit more than I got this rental home. See, they already have a CPA in place that are going to answer those kind of things. So anyway, any other questions?
How many points for each multiple choice?
That's a good question. How many points for the exam overall? 100, right?
Yeah.
Um, what was it last time? No,
Total?
I know it was total 100. How much did we allocate to the free response last time?
20.
15, I think. So we'll do it that way again. 15.
No, 10.
It was 10.
Yeah, 6 point for each multiple choice, and then we'll get 90.
It was 10 points for the, yeah, because there was two fives, right?
Yeah.
Yeah, so it'll be something like that again. 10, 10 points for the free response. I mean, I can do whatever you want. Doesn't matter. It's all on a base of 100. I don't care. I'm not locked into anything. How do you want to do it?
Similar to the first midterm thing.
So you want to, but I'm saying you want to do. I mean, this is since you bothered to come over here on a Friday, you might as well get something out of it. How do you want it to go? Do you want it to be 80-20, 90-10, the way we did?
It's fair.
Keep it the same.
Or
It's fair.
be like
It's based
of
it's
100.
based on 100, so it's fair. We just changed the format from exam to exam. I can check it all free response if I want. It's just based on 100. I'm under no obligation. There's nothing in the syllabus that said, and of the 100, this many will come from multiple choice and this many will come from free response. So we can change it however you want.
Well, if the free response is easy, I think it's better to put more points there, and then because it's like easier to be.
Well, that's a question of opinion as to which was easier, right? And that it has
I
in
agree.
there an element of um, the topic as well, because maybe you studied one thing a little bit more and you hit the jackpot, and the free response is exactly what you studied. We've all had that experience. I would say, factoring out all other things being held constant, the idea is that the free response should be a little tougher. That's absolutely the case on the CPA exam. CPA exam is split between multiple choice constitutes 50% of the grade of the points, and the what they call task-based simulations constitute the remaining 50%. Most people get through the multiple choices okay. It's the free response questions that start to cause folks some heartburn as they go through. It used to be on the exam that 60% were multiple choice and only 40% was the task-based simulations. And so I would always advise my students that they should be working multiple choice questions at 90% accuracy. If you do that, you're getting what, 54 points from multiple choice, and you only need to get 21 of the 40 points from those harder. You can do F level work in those free response questions and still get an A, right? Okay, I mean, still pass the exam, excuse me, because you need 75, and that's like an A on the CPA exam. Now, I would still advise to do 90% accuracy on 50 points. That's going to get you 45, but you're still going to need whatever the balance is to get you up to 75, so you can perform a little worse in those free response questions. So that's kind of the task-based simulations. That's kind of the logic here. It may not play out exactly that way because this is not the CPA exam, but I would say you're better off with the skewing towards the multiple choice and away from the free response. Yeah, did you have a question?
Yeah, how long is the free response? Is it gonna be like
Something like this. Yeah, I'm not going to go on and on. The one thing I could see that might take a little time is if I do find that housing one, the rental, the vacation home one might take a little longer because you're going to have to apportion costs back and forth accordingly if I do that. Other than that, it'll be something like this. I'm not going to go nuts on it. I'm going to keep it about how it was. I mean, there was some difference of opinion, guys. Back up here, guys. Um, we're all on the same page now about the length of the exam, the nature of the exam for last time being about the right size for the amount of time we have, right? So I'm going to stick with that. Do you have a question, Meg? I thought I saw a hand back there. It should be an easy test. It was easy last time, wasn't it? I thought it was easy. I'm going to try to keep it easy. You got all the notes, so I wouldn't worry too much. Okay. All right. I will post this as well as the chapter 10 lecture up on Canvas. Yeah, looking at the time now, I should have some time today to quickly do that when I go home. And so you should be able to see that up there. Okay. All right, guys. I will see you on Tuesday. Be on time.